Welcome. You're viewing the video version of the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure market breadth summary chart for April 10th, 2016. Market breadth. With this past week's market rise, our bull-bear point and figure ratio at 1.58 fell from 1.75 last week, losing some bullish territory. The total count of securities in bullish or bearish patterns decreased 2% to 3,001. The count of bearish stocks increased 5%, while the count of stocks in bullish patterns decreased 6%. The Pirls P&F Market Breadth Summary Chart shows us a market now 5 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly email version of the Pirls Stock Market Commentary free of charge, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 43 points for the first decline in 8 weeks. At a positive 326.69 points, it continues above the June 2014, the November 2014, and February 2015 tops, and below the 2 additional tops above plus 100, and continues above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode on higher average daily volume. Momentum. Now at a positive 61.43, the CCI 20 daily fell from a positive 154.68 last week, continuing outside the plus or minus 50 range for a valid zero-line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 8 weeks ago, while the daily CCI 20 began a Woody's uptrend 6 weeks ago. The CCI 20 weekly continues in a Woody's downtrend. Now, with 3 consecutive weeks above zero, it rose last week to a positive 39.10 from a positive 32.350, continuing within the plus or minus 50 range for a valid zero-line reject short entry signal if the market were to fall next week. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, REITs has entered the top 5. Oil services continues in the bottom 5. Bearish, KBW Bank continues in the bottom 5. S&P Retail has entered the bottom 5. Oil and gold and silver have left the bottom 5. Gold and silver has entered and leads the top 5. Brokers has re-entered the bottom 5. Focus this week from www.internationalman.com Comparing the 1930s with Today by Doug Casey. The following are some key points, but context here is essential to understanding. So we encourage you to read the entire article, which could be subtitled, How Social Safety Nets and Regulations Sabotage Economic Recovery. You've heard the axiom, history repeats itself. It does, but never in exactly the same way. To apply the lessons of the past, we must understand the differences of the present. To most people, a depression means 30s-style conditions, and since they don't see that, they can't imagine a depression. That's because they know what the last depression was like, but they don't know what one is. It's hard to visualize something you don't understand. Although nobody can predict with absolute certainty what this depression will be like, you can be fairly well assured it won't be an instant replay of the last one. To define the likely differences between this depression and the last one, it's helpful to compare the situation today to that in the early 1930s. Corporate bankruptcy. It's ironic that businesses were bankrupted in the last depression because the prices of their products fell too low. This time, it'll be because they went too high. Unemployment. The worker no longer has to worry about some entrepreneur exploiting him in what he considers an unfair wage, because the minimum wage laws, among others, precludes that possibility today. As a result, men stay unemployed and employers will go out of business. Welfare. It's ironic, yet predictable, that the programs that were supposed to help those who need them will serve to devastate those very people. Regulations. Unless government restrictions and controls on wages, working conditions, energy consumption, safety, and such are removed, a dramatic economic turnaround during the Greater Depression will be impossible. Taxes. It's reasonable to expect tax evasion and the underground economy to boom in response. That will cushion the severity of the Depression somewhat, while it serves to help change the philosophical orientation of society. Prices. Unlike the 1930s, when people who held dollars were king, by the end of the Greater Depression, people with dollars will be wiped out. The society. It's hard to say, for instance, what third and fourth generation welfare recipients are going to do when the going gets really rough. The way people work. Even necessary services are often terminated when times get hard. Specialization is part of what an advanced industrial economy is all about. But if the economic order changes radically, it can prove a liability. The financial markets. This time, stocks, and especially commodities, are likely to explode on the upside as people panic into them to get out of depreciating dollars in general and bonds in particular. Real estate will be, next to bonds, the most devastated single area of the economy because no one will lend money long term. And real estate is built on the mortgage market, which will vanish. The Greater Depression has started. Most people don't know it because they can neither confront the thought nor understand the differences between this one and the last. Look for the opportunity side of the crisis. The Chinese symbol for crisis is a combination of two other symbols, one for danger and one for opportunity. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you have been enjoying a peaceful and pleasant weekend, that you're looking forward to a productive and prosperous week coming up, and, as always, wishing you true success.